Welcome back to Capital Markets, coming to you live on Channels Television. Let's join our analyst from FSDH Merchant Bank now on phone, Mr. Ayodele Akinwumi. He's the head of research in FSDH Merchant Bank. Thank you so much for joining us this evening on the program.
Thank you for having me.
Great. You released the report this week titled Conquering the New Frontiers, and you concluded in that report that the expected increase in global yields provides an opportunity to gradually position for Eurobond investments. Can you explain to us what you mean, really, in real terms?
Thank you very much. The report, we looked at the development in the global economy. You remember that we had mentioned that the global central banks around the globe, in the developed countries, are adopting monetary normalization, tightening policy at the moment, and that is causing yield in the global market to rise. The Federal Open Market Committee of the U.S. Federal Reserve System met early in sometimes in June, and they increased rates. We expect that by September, when they will meet again, they're going to meet in July, but we don't expect that they will raise rates. By September, they will meet. We expect that they will raise rates, and December, the last meeting for the year, we expect that they will raise rates. And then as they raise rates like that, and then yield beginning to go up in the international market, we think that investors in Nigeria here should then begin to position for Eurobonds. Nigerian entity have actually, a number of them have Eurobonds that they have listed all over the world, and therefore we think that investors may want to take advantage of the yield when it rises to then enable them to take advantage of the attractive yield, and that's what we talked about in the report.
So you also talked about the fact that yields on federal government bonds are likely to, or they're going to continue to rise. We have also seen equity markets showing signs of recovery as economic fundamentals now begin to support equity market recovery. Locally now, does that mean that we will see better sentiment in the market? Because again, in terms of the all-share index of the equity market, we have been seeing a decline as offshore investors begin to sell off.
Okay, so yes, if you also look at the first point I made regarding yield rising in the international market, and again, we should look at the budget that the president signed into law in June, an expansionary budget, as it were. They are going to raise additional borrowing in 2018 to fund the budget. Now, earlier in the year, because of the fact that they hadn't packed the budget, the borrowing from the domestic market slowed down a little bit. But with the passage of this budget now into law, we think that they would then continue to raise money to fund the budget, which for us, we likely place a little bit of an upward trend of upward pressure on yield in the domestic market. And the federal government, the strategy that the Debt Management Office has been adopting in a number of months and years now, has been that they want to shift a little bit of the government borrowing to the long end of the market or of the curve, which is basically the federal government bonds, as against not so much from the short end, of course, to give them a little bit of a breathing space. And then as the demand for that segment of the market increases, we think is going to enable the rate to go up, and that's what we are saying here. If you look at the performance of the equities market also, of course, we have seen stability in the foreign exchange market. We have seen, of course, on account of the inflows from foreign investors in Nigeria between April last year and the end of June, where the money that came in, foreign inflows that came in through the investors and exporters window is about $32 billion, dollars. Almost half of that, about 52% of that, came in through portfolio investment and taking advantage of the yield and equities market here. But if you look at the equities market, between January market rallied, I think about 15 and thereabouts. February, March, April, market dropped. Now, and May, it went up marginally by 0.4% in June, then closing the quarter about 0.8. So if you look at the fact that we have seen a lot of sell down in the market, which for us is not only on account of the domestic issue, because if you look at the global equities market, a number of them dropped also significantly. I mean, the Dow Jones in the U.S. dropped in that first half of the year. We attribute that to a combination of factors. Some of them could be linked to the rising yield in the U.S. and other advanced countries. Also, the fact that the trade war that between the U.S. and China, Europe, and Canada, that impacted the equities market. So we have the spillover impact here. But in Nigeria, we think the fundamentals of these companies that are listed on the stock exchange support recovery. Yes, people are talking about election consideration, but we still believe that there are a lot of growth prospects on the stocks that are listed on the stock exchange. The results now that have been releasing in the last few, early this year, 2017 account, and Q1 showed significant improvement over what they recorded in corresponding period of last year. So those are the things that we think that may likely, make the equities market to recover. And if you look at the rate of decline, it's been slowing down. Like I mentioned earlier, in the month of June, we saw a little bit of appreciation, although towards the end of the quarter. But as we move in, if the election issues, if there are no crises, we don't expect there will be a crisis. If there is no government intervene in the crisis region of the country, then investors may likely bring in some money. People can take long-term view of the market, particularly on the stocks that have strong fundamentals in food and beverages, in building sector of the economy, even in the banking sector. Then, and the stocks that pay interim dividends, investors would gradually take position in them, and which may likely lead to recovery. Another important factor we need to mention also is the implementation of the multi-fund structure by the PFA, because the PFA provide a lot of liquidity to the market.
Yeah.
And therefore, we think that the portfolio at the moment may likely have a little bit of more exposure, more money to invest in equities, which will provide liquidity to live the market.
Okay, Mr. Akinwumi, let me just quickly cut in here and ask you what you found in terms of crude oil price as relevant as it is to the Nigerian economy.
Okay, so the crude oil price and crude oil production in Nigeria, we have our exports today by Q1 report that the National Statistics reported accounts for about 76% of our total exports. So it brings in a lot. That's where we get the bulk of our foreign exchange. Now, foreign exchange stability removes to a large extent the exchange rate risk for the foreign investors. So when the investors are looking at the market and realize that our foreign exchange market rate may likely remain stable, they'll be comfortable to bring in their investment. That's number one, so which we provide liquidity for the equities market. Number one. Number two is the fact that companies also who buy inputs that have import content, they will enable them to plan. Remember in 2016 when there was shortage of foreign exchange in the market, they were not able to produce, they were not able to sell, and therefore they laid off a lot of people. But really changed now, and so they will be able to get inputs at normal cost, at reduced cost, and therefore they'll be able to produce, sell, make profit, and therefore bottom line at the end of the ocean they'll be able to deliver good results.
Okay, Mr. Akinwumi, many thanks for your attention there. One of the key things that the report found is that the current debt market conditions will be supporting the issuance of more commercial papers to raise short-term funds. And we've already seen that coming from the likes of Dangote cementing the Nigerian capital market. The SEC has also now issued notice on its second capital markets committee meeting set to hold on Thursday, August the 9th in Lagos. Watch this space for more updates on that. Thank you so much for being part of the program. We appreciate your time. That's the show for today. I'm Temple Ashaju. We'll see you again.